Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar failed to stage any significant moves on Tuesday and currently holds in a consolidating pattern as market participants turn to this Wednesday's US federal announcement. Also, looking to the time frame, Thursday Sydney time 4 a.m. eyes will be on the US Federal Chairman Jerome Powell as the post-meeting news conference looks to see how the central bank views inflation, economic growth and interest rates. Due to the current nature, the market might start displaying a volatile session. Currently, the Australian dollar is capped around this resistance seen at 73.95. And from a technical aspect, it doesn't look very convincing to the bullish case as its short-term resistant line holds or contains the walls from that 73.95 level. With that said, until we get a close under 73.25, the bullish case should still hold and look up towards that top side 73.95 to 74.45.60. However, in the event we do close New York tomorrow morning under 73.25, this would expose the region of 72.85 and reassess from there. Well, since we've broken out from this declining wedge, the target of 118.25 has been reached, and now potentially could see a short squeeze if we see a close above here, as the US dollar, which measures the greenback strength against a basket of 6 major currencies, retreats further from its 3.5-month peak posted last week at 93.17. Currently holding at 92.44. I'm not going to get too bearish at the bottom side of the range. Due to the nature of coming up of the US Federal Reserve policy meeting, that the whipsaw price action may be evident in terms of the fact is that we could see a spike up towards 118.45 to 119.10.15, but may find a bull trap waiting for the euros. On the broader picture, the US dollar should turn back to its bullish case and therefore expect to see the euro fall back to re-challenge the lows around 117.50.70. The Japanese yen has fallen further in terms of the market returning to safe haven demand with the outcome of this week's high-profile two-day US Federal Reserve policy meeting. Started on Tuesday, wraps up on Wednesday, and let's see what comes out of it when Jerome Powell starts his press conference. Now, the announcement is at 4 a.m. Sydney time, and Jerome Powell's press conference is at 4:30 a.m. Sydney time, Thursday morning. So let's see how the whipsaw price action. I'm not getting too bearish, though. I feel the market may start showing some bullish bias, that is, as we get closer to the bottom side of this range around 109.15. Sterling displayed a very whipsaw price action overnight and now moving closer to its objective of 139.15 since clearing 137.70.90 just a couple of days ago. From the technical aspect, the bulls may find a little bit of trouble towards that top side as we get a little bit towards the overbought region from the RSI. So the market may reject that region somewhere around 139.19, and let's see if we see a small profit taking emerge after this 7 days of upward trek. At present, sterling yen is still contained by the level of 152.80 and therefore could still see this level holding. But we've got a hammer here and also the bullish candle pattern, that is, and also this dragonfly doji has kept the bulls in check. I don't feel the market will progress much further as we've got a bit of a tug of war with both legs. We've got a slightly stronger case to the sterling leg, but we've still got a strong case to the Japanese leg. So therefore, it may find 152.80 will contain for now. Keep an eye on these technicals in case they start to buckle. Surprisingly, gold took the upside turn overnight and claws back some of its losses, but overall the pattern I feel is not relatively bullish But that being said, if the dollar does slide a little bit further, we could see a challenge up towards 1,813.16 or to 1,824.28 with a 33 to 35 cap. However, in the broader picture sense, or the primary pattern, it is still negative and therefore could see a failed upside attempt and eventually see the market turn back to 1,786. And wrapping up with oil, well, the market seems to be posting a sideways pattern since that Dragonfly Doji came into play. Nevertheless, the rejection from the $70 handle, and along with that, with the technicals trying to strengthen further to the bull case, still keeps in check and move to 72.70 and maybe up towards around that 74.40 before any reversal. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.